what has changed significantly versus last week? And the bottom line is that not a lot has changed, okay? But we are seeing continued risk-off selling in equities, right? So the equity markets, for me, the number one thing to watch are bond yields, which are driven obviously by interest rates. As yields rise, stock valuations get compressed. And why? So stock valuations are traditionally, right, supposed to be driven by discounted cash flows and enterprise value of the underlying companies that they represent. Now, when you do a discounted cash flow calculation, if you learned this in school, you need an interest rate to apply to that discounted cash flow. And if you use the risk-free rate associated with treasuries, and that rate is going up, which it is now, it causes the valuation of these stocks to compress, which results in a sell-off. That's why you always hear stock prices go up when bond prices are going down, and traditionally stock prices go down when bond prices are going up. So if I was to show you the Treasury yield curve, it's the 10-year curve is nearly 3%, which is at multi-year highs. So look, the fixed income market is basically assuming price inflation at 40-year highs continuing for the near term. And we have a Fed funds rate, which I talked about 2 weeks ago, which is flattening, which basically looks like the markets are pricing in recession. Now, what's interesting is at the same time, the housing market is also pricing in this current environment. Mortgage rates are spiking, right? They're above 5%, 5.25% in the United States for the first time since 2010. Obviously, this makes buying a new home much more expensive and discourages borrowers from borrowing while encouraging lenders to want to lend. So with this decreased borrowing comes decreased buying, which should start to bring down the value of homes, right? So I was looking at a couple of home builder ETFs, and one was down something like 66% year to date. That's in comparison to the overall NASDAQ, which is down 17%, and the S&P, which is down 8%, Bitcoin down 13%, et cetera, et cetera. So clearly, the market is expecting this spike in interest rates to have a massive effect on the housing market,